In our list, it should be 111 if 110 was Apple planting things in our skull.
We are back with another Off the Record on the Rocks. We don't know what number it is. We've lost count. We are deep into May. We've reached new all-time highs with Bitcoin since we last talked. Cheer the applause. Woo!
Note to get a soundboard for us for episode 120.
Yes, when we get to 120, we will have sound effects ready to roll. Last couple weeks have been insane. May has just been up and down in the markets. The news cycle just whiplash. Trump bringing the South African president to the White House to run the same playbook that he did against Zelensky. You're talking about crazy advances in AI. We got to get to Google's new video model, and the big headlines for me. You've got Bitcoin reaching all-time high. You've got changing posture in the legislature around the Bitcoin Strategic Reserve, Texas passing the Bitcoin Strategic Reserve, and this week is the Bitcoin conference in Las Vegas, where I believe JD Vance will be taking the stage this year.
No, really?
I believe so. We had to double check this. But saying that, most Americans, it said something like 100 million Americans will soon have Bitcoin in their 401ks the same day that the National Department of Labor resends 2022 guidance, which prohibited fiduciaries, or at least recommended that financial fiduciaries did not have crypto in your retirement accounts. That has all gone out the window. It is financial advice. The grift is out in the open, and Trump is raising billions to go buy Bitcoin with Trump Media as the wrapper.
Grab a drink. It's time for another episode of Off the Record on the Rocks. Join Michael Toner and Ankarina Lara as we discuss the latest in all things Web3, AI, metaverse, and crypto. Tune out the noise and turn up the signal as we pour ourselves into the future. Better make mine a double.
I don't know where you want to take it all, but what's happening on your side?
I mean, let's start underneath it all, because who's been the number one? I don't know if they're really a grifter or not, but there definitely is a major player in the market. His name is Michael Saylor, was first part of a company called MicroStrategy. We observed on this show some number of months ago now, they very quietly changed their name to Strategy, removing the micro, and also changed the boilerplate of all their press releases, which identified them as a BTC, or a Bitcoin treasury company, steering into the acronym, which stands for Bitcoin. But what else does he do out in the open? Well, they have a number of other services, right? They have these other tracking tokens that track all the other behaviors, right? They mine some amount of Bitcoin themselves. They acquire some amount of Bitcoin themselves. We've learned that they also hold in custodial accounts Bitcoin for themselves, right? They don't just have it all on drives in some lockbox. They have some at Coinbase, and they have some at wherever else they're holding it. So they have this diversified model for that, a diversified Bitcoin first model. You could argue some of those tracking tokens are kind of like meme coins within the Strategy network, right? It's like they have a little bit of everything in the ecosystem, and they're very public about what they do. He famously, from the days of Twitter on into X, buys Bitcoin and then posts the receipts effectively showing the holdings increasing. And we always joked, well, he'll be the one being tapped to run the strategic reserve someday, right? Or at least some portion of it. Well, now that playbook, talk about playbooks at the White House with Zelensky on into the South African president, the playbook is now out there, which the Trump family has fully read. And if you look at all the pieces that they've put into play, have basically fully checked off every box in the ecosystem, mimicked it 100%. In fact, to even think that anyone in that family/administration knew what they were doing is a stretch. So it probably is the case that they said, hey, we want to do those 5 things. We'd like to have a meme coin. We'd like to roll that out for me and for my wife. Now we'd like to invest in a farming company so we can actually be mining Bitcoin, mining and farming. Now we also want to invest a whole bunch of money in just buying raw Bitcoin. And like you said, raising billions of dollars to do that. So long as the administration is in plain sight doing the same thing that Michael Saylor and that company, a private company, has done in plain sight, then it feels like it all will melt away. Every bit of regulation, every SEC lawsuit has already been gone. That was 4 months ago. Now all the restrictions about how you can or can't hold in your retirement accounts, gone. Let me tell you what's coming next. My prediction, hot take, and I'll toss it back to you.
Yo.
The hot take is capital gains on selling crypto is going to be gone. Just gone. We don't even want to know if you've sold any. We don't want to even know if you buy any, at least through 2028, because in 2029, someone else might come and change things. But at least between now and 2028, to me, it says this is the Wild West. This is the internet 0.5. This is rewinding time and saying you can literally do whatever you want when it comes to crypto and Web3. Just stay on the right side of the U.S. government, the military standpoint.
I think it is so dead on that it's like, it's hard to, we've been at this now for so long, trying to teach, trying to educate, trying to talk through this, like almost getting, silly about it here in 2025. This is what the Trump administration is doing. This is the product of a lack of regulatory clarity over the last 4 to 8 years with the emergence of decentralized ledger technology, blockchain technology. Without there being regulation, now you've entered, the pendulum has swung the complete opposite end of the spectrum to where U.S. banks are in early talks for joint stablecoin ventures. You've got banks from the Wall Street Journal. This is companies owned by JP Morgan, Bank of America, Citigroup. I mean, these are the backbone of the American financial system, talking about U.S. stablecoin legislation, right? They want a cryptocurrency, albeit a stablecoin, not a decentralized currency, to be their transaction layer. Well, what about on the global trade stage? What about on the global stage? It's playing out right in front of our eyes. New global trade deals are being made. We've talked about the de-dollarization for years. Do you think that these countries aren't using the power of cryptocurrency as negotiating leverage over the United States? Why would we rely on, if we're a foreign country, why would you rely on the US dollar when there is a faster, cheaper, more decentralized global currency that has emerged? And Michael Saylor's playbook now being mimicked by the Trump administration, or by the Trump family, and even that distinction of this lack of separation with the U.S. president now using the political office in the open to go and raise more than $2 billion with the sole purpose of acquiring Bitcoin to line his own pockets, right? This is not to the betterment of the American people. This is to the betterment of the Trump media organization to go raise this capital, buy Bitcoin, force it into the mainstream, force it as a global reserve currency. And the point I made today, the National Labor Department resending this guidance against Bitcoin and 401ks, we've been calling this for another few years, which is who's the largest holder of state pensions, who manages more assets than anyone? BlackRock. Who's talking about tokenization of securities? Who's out there buying this institutional purchase of Bitcoin other than MicroStrategy? BlackRock. Is it going to get just force fed into the 401ks of American people? Like, these fiduciaries are now allowed to do it. Financial advisors, your AI Fidelity bot can now go buy Bitcoin on a dollar cost averaging basis. And American people will now hold at least the Grayscale ETF in their retirement. They will have Bitcoin exposure, not to the raw asset, but to the derivative asset. Seems like now's the time to buy, despite all-time highs. I mean,
well, listen, you're not wrong. And of what I hear, but you didn't say it in what you just said, is that there is a better, faster money. But you know what would even make a better, faster money even a little bit better is if the United States were to control the better, faster money, which is sort of written to be uncontrollable. The algorithm and the derivatives where you just ended is that area that I think we should maybe just focus in on a tiny, tiny bit, because it creates we have to start separating the idea of exposure to Bitcoin from acquiring Bitcoin itself, right? Let's just rewind a couple examples. Like, so El Salvador has recently been passed by a couple private companies who are trying to chase strategy in having the most Bitcoin reserve. I think I sent you that article. There's a group of people who are banding together to make a company to basically acquire more Bitcoin than is available currently to El Salvador, right? There's a race to try to control the largest amount. And how does El Salvador buy Bitcoin? Well, they're mining a certain amount of it themselves. But where do they go buy? It's a question I don't know the answer to. Are they buying a lot of paper Bitcoin, meaning they're buying the shares from different derivatives? Because the IMF could come in, let's just say, and say, well, BlackRock, you can't sell to El Salvador. So maybe they can start cutting off certain on-ramps to them. But they'll just come out and say to a country, you're not allowed to buy a globally available resource because we're the IMF, is a strange statement, but it steers me more to that. It makes me wonder about the derivative aspect of it, right? How much of it is it really on paper versus what they actually have? The derivative of JP Morgan on derivative. So one of the other articles that popped out that I thought was pretty interesting is there is this interest in wanting to tokenize stocks. So let's just talk about what that really means for a second. Tokenizing a stock, right? This is once again Jamie Dimon's nice little portrait photo on these articles that he has long said, I'd rather have gold instead of Bitcoin. You know, Bitcoin is only for terrorists. He's the number one naysayer in the public. But we just learned that Bitcoin is now outperforming gold and is starting to eclipse all these what these gold bugs are holding on to in the last 25 years. And JP Morgan, I think, is aware of that. So comes out and says, hey, we're going to tokenize stocks. We're going to make it so you can buy a fractional piece of a stock. You can already do that today, right? You can buy slices on your Charles Schwab. But what does tokenizing it allow you to do? It takes the American stock market and makes it open 24/7, just like the meme coin gambling casino. Suddenly, you create an entire derivative layer on our securities at our exchanges. You put a entire derivative layer on commodities, effectively, which is already a derivative. You could put a tokenized futures, which would be a derivative of the futures, then a derivative of that, which would be tokenizing the futures. When you start to blur it all the way down with these different derivatives, then you can see how these companies can, with a straight face, say, you're going to have, like you said, Bitcoin exposure in your 401k, because literally these weird index funds that every single one of the major retirement providers in the country, from BlackRock all the way on down past Wells Fargo and Fidelity, down to US Bank, to even the little guys, are going to have these bundles. Like, what could go wrong, right? What's in the bundles, Dad? Oh, I don't know. Just keep investing. And we just keep adding more and more American value, American money into a derivative product that ultimately isn't the actual thing. And if you convince people that having the paper version of it is real and they believe it and they pour their money into it, then you effectively have controlled it, because then they'll never get the real thing.
While out the other side, the big guys buy the real hard asset and talk about self-custodying it and having your keys, your crypto. Yeah, I mean, I think that's exactly right. And by the way, buying strategy on the New York Stock Exchange, you effectively now have exposure to Bitcoin, right? You can go buy a publicly traded stock and you've got exposure to Bitcoin. And then Coinbase ousting, I think it was Discover, to make the S&P 500, right?
Yeah.
Talk about like another just big signal to the market. If you're buying Coinbase, you effectively have exposure to cryptocurrency, not just Bitcoin, probably all of them, because they have to have custodied these assets to then go sell the paper asset. At least you think so, you hope so. I'm not sure how that works. I mean, from the Coinbase perspective, I do think that was the deal, that in order to be a publicly traded company and in keeping track of what was custodied and what was not custodied and how that gets accounted for, I think it's probably a little bit different on 401ks and fiduciaries. Like, the fiduciary is 100% the custody of those 401ks, right? You have to, it's a 7 to 10 day hold period when you go to get that money out of those ETFs. I don't care if it's the Grayscale Bitcoin Trust Fund, it's still going to take you 7 to 10 days to extract those funds, which is not real Bitcoin. You do not have the keys to it, right? I mean, that's the equivalent.
And what you just said, we talk about, you have no keys, not your cheese, no keys, not your coins, whatever the term is. You don't hear anyone saying that anymore. No. There's no one on TV they're putting up there. There's no more
people that.
Why would we want to teach someone how to use a ledger or a cold storage or a Trezor or this, or it's like this? No. It is, and like you just said, and something that shouldn't be lost on our listeners is, if you own stock in a variety of companies, so we're not just talking strategy. You could list probably about 10 of them. Strategy. I don't know about Apple, but NVIDIA. How about Tesla? Just down the line of major Fortune 500 stocks, how many of those companies have crypto on their balance sheets? That's only going to increase as time passes. So even if you never step in to the 24-hour, 7-day-a-week crypto casino and buy your first meme coin, your first Doge, or you even buy your first fraction of a Bitcoin, if you never, ever do any of that, because you are a stalwart, gold bug, tried and true traditional, I just use my index funds, slow growth is fine with me. Well, sorry, sir, but you now are part of the story, the new narrative. You own exposure, and they will leverage it. Like you said, a 7-day period. It takes me 7 days to go find out who I can shake down to pay you out.
All right, stick with me here for a second, because I think we may be unlocking something, which is you said what would make the better, faster, cheaper, more efficient money even better, which is if the U.S. adopts it. And then I mentioned the stablecoin legislation. Circle,
that's a good one.
To go public. What I will be most interested in this stablecoin giant Circle, the makers of what is USDC, right? The stablecoin matching 1-to-1 with the US dollar, targets a $6.7 billion valuation in its US IPO. Who do you think will be the biggest institutional holder when that IPO goes public? Who would then be taking the custody of USDC, right? You see how I did that? Who would purchase the majority share to now have ownership over the digital twinned dollar? My guess is BlackRock.
So keep following this though, because here's an interesting thing. So Tether, who is also basically has another version of what you just described, right? Tether has USDT, not to be confused with USDC, but they're both effectively the same thing with two different acronyms, two different call signs. What do we know about Tether? It's different than USDC. Tether is one of the largest holders of US Treasury bonds, purchasers of Treasury bonds.
That's right.
Right? So they Tether as a private company already hold more USA Treasury bonds than I want to say all but 4 countries in the world, or 5 countries. They're way heavy in that. So they have put their play, which is we're going to invest in the United States because we are tethered to the United States dollar, right? It's a very simple saying. Well, what's Circle saying? Circle's like, well, we haven't been buying any treasury bonds. That's not what we do. We're Circle. We have USDC, right? This is a digital twin of the dollar. So we're going to go public. We're going to do something. It's like there would be something akin to, hey, the Federal Reserve is now going public. The Federal Reserve is having an IPO. And the board members consist of each leader of the 8 families who run it. And you as an American can buy a share, or better, a slice of a share, or better, a piece of a tokenized share of the Federal Reserve. What does that mean? Well, you're buying shares in the ability of a private company to lend money to the American government. Okay, so if USDC goes public and I'm buying shares, then are we buying shares in the future of the same aspect, but the digital version of ensuring that these digital transactions can occur at the same value for the American currency, which is ultimately, again, they're like these IPOs of companies who are managing fiat currency or the dollar digital twin of it, but each with their own approach to get to it. One from the fundamental side, treasury bonds in Tether, one from the full-on get the public support, because there's probably a narrative there that's it's a good one, which is, well, shouldn't the American public all benefit from the growth of the American dollar as it is tied to its digital twin? Like, why wouldn't we? It's a little confusing as to who, or maybe but the answer your question, sorry, in the long-winded way, is who's going to be buying up a lot of it? People in the American government and agencies who are going to want to control the majority stake of those companies, and it's definitely not going to be sold to guys in Hong Kong or guys in any BRIC country. Let's just be honest about that.
This is article from May 19th. Tether surpasses Germany's 111 billion of U.S. Treasury holdings, making it the 7th largest net buyer of U.S. Treasuries, surpassing countries including Canada, Taiwan, Mexico,
Japan,
Norway, Hong Kong.
Not even Japan.
So it's surpassing Germany's $111 billion of U.S. Treasury holdings. So it's more than that. It's 120 billion Tether has, which, think about these global conversations, these global tariff conversations. And I mentioned this at the top of the show. It's these big $1 billion negotiations. Make no mistake that the investment in Trump media or the investment in Circle's IPO or Treasury, Tether buying U.S. Treasuries to beat out foreign countries' holdings, these are the players who are now investing in America in 2025 in some way, shape, or form. Investing in America might mean paying Trump media. It might mean buying the digital equivalency of the US dollar, or it might be Michael Saylor's strategy and others to come of buying the global reserve currency. But it is a giant shift in the financial banking system. The backbone of global financial transactions is changing, is coming on chain. Stocks being tokenized, being traded by JP Morgan as derivatives is yet another example of what this is going to mean. You're able to buy the digital dollar when Circle goes public.
Yeah, but let's also not forget that part of this strategy, not to keep overusing the word strategy, but part of this technique of what Circle is pursuing, right? Everyone has their technique. We just said Tether. What was theirs? Well, we're just going to buy more U.S. Treasury bonds in every country in the world. Okay, that's a very specific goal, and they're on their path to doing it. Circle has a different approach. What's something we know? Well, if you have this idea of cryptocurrencies, and if we agree or if we believe the ethos of it is that it's 24 hour, 7-day a week access for every single human being on the earth who has access to an internet connection, and then then over time, as we're seeing with the current American government moves and these other big countries, they're trying to control it by either accumulating as much as they can. They're trying to control it by preventing, in some cases, like you go to China, they make it illegal to purchase crypto. So then the government can do what they want to do, and then they can make it legal again. They can kind of whipsaw with laws and regulation. We saw in the last 5 years since we've been doing this podcast that American governments and regulation, whether it's a tweet or a real bill, can stymie innovation. It can slow down the whole market. You can control it by words and by regulation. Okay. What's another thing you can do? Well, if you have an IPO of a company, this is a Coinbase 101. You have what's called an initial offering. You have an initial intention to buy shares as part of the IPO because you're an accredited institution. Right? This is how guys like Morgan Stanley come in and get a chance to buy a tranche, to use their words they love so much, a tranche of shares for the IPO in Coinbase. What does that mean? They get in at a price that's lower than you or me or any of our listeners, right? The retail investors don't get access because they're not an accredited institution. Well, what a perfect model. Because if Circle's going to IPO some of the people who've already raised their hand and are written about the article, guess who's there? Kathy Wood's ARK Investment. We raise our hand. We'll take 150 million shares. Blah, blah, blah. Who else is in there? It's like you can go around and effectively prevent all the people you don't want to be in the party from getting into the party. And then when you actually do IPO, well, it just starts to rip because there's already that pre-energy. And then if you need to sell some and make some money and dump, you can. So effectively what you're saying is, even though it's a stable coin, it's a tether, it's a free exposure to this global thing called Bitcoin. If you create companies that actually have the exposure, then you can create IPOs that limit the exposure to only those that you want. And guess who gets to walk in the door of the gala? Those people. So this is just, again, this is like even more powerful than derivative. This is gatekeeping at the multi-billion-dollar level, which I don't think we're going to see the effects of for even a few more years, because we don't really understand how they're going to be playing around with the balance sheets.
Token gating.
Token gate 25
at the highest level. I mean, it is kind of where I was going of this. You know, we used to joke about, just a joke, but people would make the comment that Trump could walk into the middle of Times Square and shoot somebody and not get in trouble for it. I really feel like what's happening right now with this global negotiation and the raising of 2.5 billion to go buy Bitcoin, it is the market equivalent of doing this in the middle of the New York Stock Exchange and everything we just described happening because he knows what is about to happen. This week, again, the Bitcoin conference in Las Vegas, the very same week that we get this rescinded guidance that crypto can be purchased by 401ks, and the same week that we hear that the IMF is going to ensure that El Salvador cannot buy any more Bitcoin. That feels very, well, guess who is going to win this global Bitcoin game, this global Bitcoin strategy? We are. The United States is going to win it. And I think I may have even said this on one of the last shows, the real irony to me, and it's barely breaking through, but I guarantee you we will talk about this sometime in the next 6 to 10 weeks, which is this legislation being introduced to prohibit American legislatures from insider trading, from buying and selling stocks listed on exchanges. Great. That's so convenient, because guess what they're not going to need to buy is this market, these publicly traded companies. Oh, okay, I'm a senator, I won't buy those, because guess what's not included in that? Bitcoin, Ethereum, Solana,
or any of the tokenized versions of the stocks that I would have bought anyway.
Right. They're meme tokens now.
Like, I'm buying Apple coin. I'm not buying Apple. and as long as you create a derivative, you create a new lexicon, you create a new language, you create new stuff to confuse everyone. Most normal people don't know what futures are relative to the commodities they represent. Most normal people don't know what ETF or ETP stands for. They don't care. They have someone who manages their money, who does it for them and helps their 401k grow. I mean, all of these things. But before we kind of get to the end of this show, because I think we have now this blur. There's a stratigraphy, right? There, I would say that the economy and this new digital economy, to echo, I think, a point you were alluding to, is America's new weapon in the global war. We are weaponizing the American dollar by creating digital twins. We're weaponizing American companies by allowing them to have Bitcoin on their balance sheets. We're doing all these things to, like, let's just say, what if the United States were to always control 51% or more of the amount of Bitcoin that's in the world? What if they got to that point? Well, then what if they started hiring Bitcoin developers to work for the DOJ? What if they started making changes to the code that they could inform and vote on per the consensus mechanism? Like, this is what Satoshi never had envisioned, was that there would be so much political and governmental organization that it would start to cut out the little guys doing the mining. This is something that can become an apparatus of the military, the same way that there's, and this, I guess, falls under the Space Force, who's in charge of cybersecurity and space. I would assume it would fall under that unless they make a new division. But what will ultimately come, I think, to kind of challenge that is this AI that we haven't mentioned once on the show today, and the ability for AI now with the new Google model. I think you've seen some of it. The video, the text to video components. If our listeners haven't seen this yet, I mean, I'll give you an example that I saw that's pretty wild. So AI is very accurately representing like the average person on the street interview. You'll see these videos of someone going up, like the Times Square example with a microphone and like interviewing two girls, and they're like late teens, early 20s, and asking them questions, and as if they're responding to a citizen journalist. And it is very hard to see that it's fake. And if you start to think, one of my favorite quotes that you've said, I think there's value to this, is that the currency of AI is all this crypto, the coin, the value that's digital is what's going to be powering this, the fuel for this AI. And right now, the fuel is on fire. It's burning white magnesium hot, and companies are getting yet more investments than they ever have and bigger valuations, because I don't have to just use cash or stock. I can use all those derivatives I just mentioned to you, layers upon layers of derivatives of value that's been fabricated out of thin air. And so now, how far away are we from 2028, where we'll have people on the street telling us about what's good or bad in our 401k, and they'll just be bots run by the DOJ, agents of strategy, the fake talking heads who just steer all the sheeple, all the Americans, into these retail paper versions of value that are just the same thing as an American dollar. An American dollar says Federal Reserve note, and it says it's worth something, $1, not tied to gold. What's it going to be tied to? Oh, our new digital twin. It's right over here. And it looks the same. It's just called the digital reserve note, not federal, but digital. It's just going to subtly change, and no one's going to know, because we're still going to have these little pieces of paper we use in our pockets or on our screens. This is the beginning of something that's way bigger. And I don't know if your thoughts on the AI from what you've seen. It's intense.
I think the way I put it is that in a generative AI world, the blockchain becomes critical to understanding what goes in, what tokens go in, and what tokens get generated. For those really deep into AI, that is literally what it is called. The token window of text that gets submitted into a large language model, and it spits out tokens. There's a value in, and there's a value out. The value out can be more, right? You prompt it and you extract a 500-word article. Again, dumbing it down a little bit, but you get the idea. Value in, value out, and you can control it. Well, now you're going to need some decentralized ledger mechanism so that brands can protect their intellectual property, so that you can protect what you own, so that you can keep track of your assets, your money, your creations, every video, every article, every photo that you've taken that you own. We've talked about this changing definition of ownership, what it means to own or have a Federal Reserve currency in your wallet, physically in your leather wallet. I own it, I feel it, I can touch it, versus what self-custody means on a USB drive, and what the difference is with the public key and the private key. And again, it's almost like I can even hear myself giving up on teaching that, like as I say it, of this is the inflection point. We're maybe 110 episodes in. Again, I don't know what number, but it feels like an inflection point for me of we've been screaming it from the rooftops, what all of this stuff means. There will be a tipping point where those who see it, those who believe it, those who understand it are already on the boat. The boat is leaving, and there will be people who will miss it. They will get it in their 401ks in some way, shape, or form, but there's a big difference between the ownership of the asset itself and all of these derivative meme tokens. We will have to leave it there. I'm glad we're flying into June. Some big, bold predictions of things to expect, and I can't wait to hear big speeches out of BTC Vegas. We'll do it again, hopefully next week.
Hopefully next week. Let's keep it tight for the summer. It's I like to say we buy in May and then go away, but I think we should stay in June and just keep up the cadence. One thing, if I can take away from it all, is it makes in-person conferences like this one that's happening in Vegas so much more important, because if you're physically there and you're watching the human talk, then there is no threat of AI. So if nothing else, maybe all this will return us to more in-person human contact as opposed to relying just purely on our internet feed to tell us what we're doing.
Do it again. Peace.
Talk to you soon.
That's all the time we have for this episode of Off the Record, On the Rocks. You don't have to go home, but you can't stay here. See you next time for more news and all things crypto and Web3.